Ladies and gentlemen, good day and welcome to the Bharat Electronics Limited Q4 FY24 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit. Thank you and over to you, sir.
Yeah, thanks, Steve. Good morning, everyone. On behalf of ICICI Securities, I welcome all the participants for Bharat Electronics Limited Q4 FY24 earnings conference call. At the outset, I would like to thank the management for giving us an opportunity to host this call. From the management, we have with us today Mr. Bhanu Prakash Srivastava, Chairman and Managing Director, Mr. Damodar Bhattad, S. Director, Finance and CFO, and Mr. Srinivas S., Company Secretary. We will start the call with opening remarks from the management and then we will open the floor for an interactive Q&A. Without much ado, I would hand over the call to Mr. Srivastava to take this forward. Thanks and over to you, sir.
Good morning to all of you. Bharat Electronics has done a reasonably good performance in Q4, and if you see that overall in the year 23-24, yearly, if you see our turnover has increased to 19,819.93 crores, which is a growth of 14.35% as compared to previous year's turnover of 17,333. PBT increased to 5,335 crores, which is a growth of 33.87%. EBITDA has increased to 25.22% as compared to 23.35% previous year. PAT increased to rupees 4,020 as compared to 3,007 crores in the previous year, with a growth of 33.68%. Earning per share has been 5.5 rupees as compared to 4.11 rupees previous year. And we had acquired highest ever order in a financial year, that is 35,000 crores, which amount to order book as on 1st April 24 is rupees 75,934. So it has been a reasonably good performance despite the challenges we faced in global supply chain. When we gave the guidance in April this financial year, previous financial year, we gave that turnover of growth of around 15 to 17% and EBITDA in the range of 21 to 23 and order is in the range of 20,000 crore plus. However, at that time we did not take into account that Israel, that Hamas war, which came as a bit surprise to us in October and which did have an impact on our turnover in even flow. That's how you see that the impact which happened in Q2 and Q3, we were able to overcome with our effective management of this new situation, and that's how Q4 to a large extent we were able to recover from that impact of Israel war, and we achieved a turnover in the range what we gave the guidance in April. Overall, it has been a good year, and we see an even better year in next financial year. Thank you very much. Yes.
Hello.
Hello, sir.
Hello. Yes.
Yes.
Should we start the Q&A?
Yeah, of course. Steve, start this. Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Mahavar. Please go ahead.
Good morning, sir, and congratulations on a great year across line items.
For FY25, we have a lot of contracts which have already become part of FY24. So you'll expect around what kind of order intake in 25, and if you can help in the bottom-up details of the same, that's first. And apart from that, revenue and margin guidance.
We are expecting order acquisition in the range of around 25,000 crore in 24-25. That we are not factoring order for QRSAM because still services are in the process of taking acceptance of necessity, for which whatever inputs are required, we are giving to them. So because it's being a big value order, we expect that it may spill over to 25-26. So without QRSAM or this, we are expecting a order acquisition in the range of around 25,000 crore in 24-25. Revenue, we are targeting a growth of double-digit growth of around 15%, and EBITDA in the range of 23 to 25% this year.
Thank you very much. Second point on, incrementally in terms of exports, any large tier 1 platforms this year and next year you're targeting?
Export, if you see that we have done around $92 million, so almost double of what we did previous year. Our export order book is around $400 million, and we are expecting another $200 million plus order from our export market. And we are targeting a turnover of around $110 million this year.
Thank you. Third and last question is on the import content, sir. FY25-26, what is the target reduction in imports? And yeah, that's it. Thank you.
Import content, if you see, it depends upon the product mix. So if it is a indigenous content product which is either designed by BL or in collaboration with DRDO, so their import content will be in the range of around 30-35% because all components, modules, normally still we are dependent on import. So basic that 30% import content will be there. Whereas if we go for our collaborative partners where we tie up with foreign sources, there as per work share arrangement for each product, normally it varies anywhere between 60% import, means 40% import if you see that value-wise. Government also wants around 60% indigenous content. So in that range. So, but it varies from contract to contract based on mutually agreed work share arrangement.
Sure. Thank you and good luck, sir.
Thank you.
Thank you. The next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. Thank you for the opportunity. Just wanted to understand factors that led to such a strong gross margin performance this quarter. How sustainable is it? And you sort of indicated that, better margins will be 23-25, which is higher than what we initially have guided last year. So, what are the factors that is driving that? Maybe I'll just follow up after that on another question.
Yeah, the major reasons were the composition of the product mix which happened during the current year. There are around 300 products which we are selling, around 300 products. So the composition of those products that, this year led to a gross margin of 45%, around 45%. Going forward, as we guided, it will be an EBITDA margin of 23-25%.
Sure, sir. Maybe what was the non-defense mix this year? If you could kind of highlight that and how do you look at it going ahead?
Non-defense mix, sir.
See, non-defense mix, if you see that last year we had a major supply of EVMs of around 1,000 crores. So this year that value will be less, but we are targeting other products in non-defense market. Maybe we are trying to bring that ATMS, airport surveillance radar, some metro products like platform screen doors. So that will be largely compensating whatever will be reduction in EVMs. So percentage-wise, it may remain roughly in the range of around 15% of the total revenue, non-defense.
Okay, sir. And maybe just wanted to understand in terms of overall contract order book, how much is fixed price, how much is variable price contracts, any other levers that we have in terms of, to kind of expand margins further?
Most of our products are fixed price contracts only. Most of our contracts.
Fixed price contracts, but most of them have an ERV class, exchange rate variation class is there in almost all the contracts.
Sure, sir. Those are my questions. I'll get back to the question.
Thank you. The next question is from the line of Renu Bhed from IIFL Securities. Please go ahead.
Yeah. Hi, good morning, team, and congratulations for the strong performance. I'm sorry I missed a couple of minutes of opening remarks in case if I repeat my question. So firstly, wanted to understand a bit more in terms of how the revenue mix for fiscal 24 has been between defense, non-defense, and also services portfolio. And given the fact that fiscal 24 has seen very strong order inflows, most of it seemed to be short cycle except for the fuses. What percentage of the backlog you think should be executable in the next 2 years?
As far as defense, non-defense, it has been around 81% is defense if you see the previous year, 4% is export, and 15% is non-defense. And if you see that goods and services composition, 90% has been in sale of goods and 10% is the sale of services. So that has been composition of previous year. As far as this year's composition, I presume that this will be in the same range because whatever will be reduction from EVM, it will be compensated from some new what you say that areas like airport authority and platform screen door and some of the metro products. So will be in the more or less same range. As far as product cycle, 75,000 crore if you see the total, yes, fuses are for 10-year contract, but all others are executable in anywhere between 2 to 5 years because the products which are especially related with naval business and which goes in ships and submarines, there it spreads from 2 years to 5 years.
Okay.
So based on all these composition, only when we give the target for next year, we take into all these considerations. And when we say that next year we are targeting around 15% growth, that is the opportunity we have for execution.
Right. Secondly, on order inflow or the order pipeline, earlier you had given a broad range that over the next 2-year bucket, we should be having at least 50,000 crores of inflows. But if we look at the pipeline in terms of large projects, can you help us outline which would be the large ticket size projects which could see finalization over the next 12-18 months? And to this base case number of 50,000 crores, what incremental short cycle orders can come to drive similar upsides the way we had in fiscal 24?
See, if you see that large size projects which are underway, one is that QRSAM. Which is the biggest order. And that will be anywhere in the range of 30,000 crore plus if we add both Army and Air Force requirement. But since it is only in the AON stage where all they are collecting data input and then they will make a statement of case, it will go for AON, then after that RFP quotation, then PNC, then order processing. So the way this goes, we expect this to materialize only in 25-26, unless government becomes very fast and aggressive and do it out of the way. So it all depends upon how government processes. But keeping aside this large contract of QRSAM, what are the pipelines? Because our product spread is very, very large. So when we are monitoring around more than 70 type of line items are in pipeline, which are more than 100 crores and are in the range of 100, 200, 500, 600, 1,000 crores, 1,200 crores spread across. So if we add that and see a reasonable level of success in this financial year for order execution, we see the figure of around 25,000 crores.
Sure. Got it. And lastly, can you also share of the order backlog that we have today, 750 billion, some of the marquee projects that you were executing, Akash, LR SAM, maybe the last leg of IECC.
Akash, LR SAM, Himshakti is there.
Himshakti, what would the value of these projects in the backlog for us today?
Himshakti's project is around 2,500 crores, 2,527 crore. Akash Army is 3,500. LR SAM left out is 5,600, but this year we are targeting around 3,200 crores. MPR Rudra is 2,400 crores. This year, because we have to give FOPM, the value may not be very high, around 400, 500 crores. Shakti EW system, IAC system. So many big projects are there. ADC NRS there, Air Defense Control and Reporting System, around 1,967 crores. We may be doing around 1,000 crores of this. So these are all projects, bigger projects, which are spread across next 2 years, 3 years. So depending upon what is the execution plan, we plan this year and then balance goes to next and next to next year.
Got it. That's pretty helpful. I have a couple of more questions. I'll come back in the queue. Don't want to take too much of my time alone. Thank you. All the best, sir.
Thank you. The next question is from the line of Dipesh Agarwal from UTI Asset Management. Please go ahead.
Yeah, good morning, sir. So my first question is, if I see the cash flow, it seems there is a significant increase in the provision for warranty, liquidated damages, and bad debts, almost 500, 600 crores kind of a movement. What has led to increase in provisioning, and would we expect a reversal in the future of the same?
See, provisioning is made in accordance with the contract conditions. So as soon as we cross the contract date and we don't receive the delivery date amendment from the customer, we need to make the provisions. This provisioning may get reversed or not. We will be taking up with the customer in many of the contracts, but it will depend on the outcome which may happen in next year, next to next year. So provisioning is based on the contract date. That's how the provisions arise. Some of the projects have crossed the provisioning in the contractual delivery dates. That has led to the higher provision in the current year.
But nonetheless, we continue to engage with customers, and there are good probability that some of them will get reversed.
Okay. So this kind of provisioning will recur for the next year, or next year we should see a normalized provisioning and not these elevated provisioning?
See, what has crossed the delivery dates, if some of the contracts of the order book of 76,000, what has crossed the delivery dates will obviously remain again in the provision zone unless we are able to get in touch with the customer and get the delivery dates amendment. So that will continue. But some other, or it may not be, I cannot tell the precise figure how much it will be, but definitely what has crossed will be there. We cannot tell whether it will be 500 or 200. That number we will not be able to tell, because in the new contracts this problem will not be there.
Actually, many of the projects, if you see, these are very complex projects, and they have got lot of dependency, lot of scope modification based on the site condition, based on the project progresses, based on the conditions of that. So there we are very confident that customers do consider it and then gives the DD extension without LD. But then amending that contract, because it has to go to original approving authority, and big value contract original approving authority, it will be at very high level. So it involves a lot of time, and sometimes it may even go more than 1 or 2 years. So as per laws, we have to do the provision, and as and when that we get the DD extension without LD, we withdraw. So it continues. Some provisions are withdrawn, some are added.
Sure. So secondly, in the past calls, you have highlighted the Israel conflict having some issue on our supply chain leading to revenue deferments. What is the status currently?
See, there has been a significant improvement because that our OEMs in Israel, they found methodology or methods to affect the shipment, though it takes a little bit more time than in normal course. So yes, initial impact was high, but that's what in opening remark also I told that Q2 and Q3 did have a significant impact, but a large portion of that we were able to recover in Q4. Now there are impacts, but we are trying to minimize. But I cannot say that there is no impact of Israel war. There are component supplies from Israel. There are sub-module supplies from Israel OEM. They in turn, they have to source it from foreign OEM, process it. And the area being disturbed, it does have an impact. So we are trying to take care of this.
Sure, sure. And sir, lastly, so it seems HCL will be scaling up the LCA production from this year. So how does it benefit the Bell? What would be typically Bell's share in?
I will tell you. See that LCA avionics is from our side, Bell side. So digital flight critical avionics like digital flight control computer (DFCC). Then pylon interface box, which interfaces the weapons with the platform. These are then analog that ADC, that controller. These 2-3 products are from our side. So if you see that 83 LCS, our contribution may be around 2,000 crores, and remaining 97 for which AON has been granted. We have given quotation in the range of 2,500 crore only in avionics portion. So that is our contribution. So if they scale up, we scale up our production for these avionics products and supply to them.
And this is excluding AESA radar, right?
Yes, this is excluding it. It's only avionics portion. That's what I'm telling. 3 products I already told you: DFCC, PIB, and ADC, Air Data Computer. So these are these 3 contribute to avionics portion of the LCA.
Okay. Thank you, and all the best, sir.
Thank you.
Thank you. The next question is from the line of Umesh Raut from Nomura. Please go ahead.
Hi, sir. Good morning. Congratulations for the good set of numbers. So my first question is more of a follow-up on Deepesh's question, which is related to provisioning. So if I look at Q4 quarter, we have other expenses closer to about 1,200 crores, about 68% year-on-year jump. So was there any higher provisioning in Q4, and what that number could be?
I think provisioning what you do major is around 230 crores, 220 crores, which amounts to, which relates to one of our projects called Integrated Air Command and Control System, where delivery date got extended, but it's a very complex project with involved majority of the dependency on the customer side also, and change in the scope, modification in the scope. So because DG has trust, we had to provision it. But we are in the constant touch with the Air Force, and they have formed a board of officers with our representative in that officer, board of officers, who will go through all these dependencies and recommend that their finding. So we are very confident that we will be able to get the extension, but the process is long because it's a big project. So their approval process also, in approving authority also, is at a very senior level in MOD. So it has to go through all the levels, and then it happens. So contractually, we had to make the provisions, but we are working on that.
Got it, sir. So if I exclude that amount, then our other expenses could have been in the range of closer to 950 crores for the quarter.
230 crores is there. Definitely one project it is made. So other than that is others, yes.
Got it, sir. Thank you for that understanding. Sir, my second question is on the capex front. If I look at our capacity expansion, so first of all, how much at a blended level we have capacity utilization at this point of time, and what are our plans in terms of new capacity expansion as well? And is there any plan to get into new product like electronic fuse in future?
See, your question is in 3 parts. One is that capacity utilization. So, see, our is not like a single product where you keep on doing that. These are all strategic capacities built, and we produce the products. And if any routine type of capacity is not available with us, we outsource it and do the critical manufacturing in-house. So the capacity available in the market and capacity within factory, within BL, we are able to meet the customer's requirement. But nonetheless, we keep on working on building new capacity to take care of future requirements with a growing order book. So if you see that we are building around 5 new factories. So one advanced night vision factory at Nimaluru is ready, and it is ready for inauguration by relevant authorities. That is around 50 acres of land and expenditure of 300 crore plus. Then another facility we are building in Ibrahimpatnam in that Andhra or Telangana, where Ibrahimpatnam is near Hyderabad. So there we are building that facility for EW system for land at around 200 crore investment we are doing. This will come up maybe by next year. Third facility, we are doing a weapon system and integration, defense system integration in Palasamudram. It's a big facility with 930 acres of land for all missile system integration and other defense integration. That also work has started. In another 2 years, this should be operational. We are also working on building a facility for fuse complex and explosive at Nagpur with around 200 acres of land. That should be operational in another 2 to 3 years. We are working on that. We have a land of around 30 acres in Devanhalli, where we are going to build a manufacturing facility for airborne equipment in EW system. We have facility. We are in the process of approval of capex. And we are also working with the UP government. We have requested them. We have signed an MOU, and they have committed around 175 acres of land near that defense corridor in Agra, where we will be setting up MRO facility for missile systems, including QRSAM, plus part of manufacturing of these missile systems will be done there. So these are the investment. In average, around 600 to 700 crores per year we are investing for building new capacity and upgrading our existing facilities also. Like supercomponent facility in Ghaziabad, we are upgrading to latest whatever technological requirement. We are building a supercomponent facility in Hyderabad unit existing with investment of around 130 crores for present that ESA-based radar manufacturing. So these are the capex which we are doing. So every year 600 to 700 crore we are pumping in for capex.
Got it, sir. Sir, my last question is related to new orders. So, as we are saying, Indian Navy is finalizing 2 major contracts, one on the submarine side and second on next generation corvette side. So, what kind of systems we are planning to supply over there? So, basically, repeat order of submarine and then next generation corvette. And second, on the Indian Air Force side, because there is also a large pipeline for compact helicopters and utility helicopters. So, what kind of equipments we can supply for those programs as well?
See, if you see that new generation corvettes, there are almost around 10 to 12 equipments which BEL is supplying on both P-15 Bravo, the destroyer, and this frigate P-17 Alpha. This involves sonar system, communication system, ship data network, combat management system, EW system, radar systems, on these SAM, surface to air missile, on these. So all these equipments which we have been supplying, we find that there is no reason that NGC also it should not be there. So NGC also involved these type of equipments from BL side. Coming to submarine side, there are 2 aspects. One is that P-75 additional submarine which will go with the AIP, and there the foreign partners will be there. There it is either L&T or MDL, two Indian shipyards with foreign partners. They are in the fray, and one of them will select it. So we are working on with both of them to what extent indigenization can be done, and we can do indigenous manufacturing. P-75I again submarine, we have a majority of the equipment in house because it's the indigenous manufacturing. So it all involves sonar system, communication systems, and related many equipment, combat management system or combat information system. So these are the equipments which goes in this submarine. So it depends. If it is a totally indigenous P-75I programs, our share will be much more. If it is with the foreign OEMs, then we have to negotiate with them to what extent indigenous content will be there in line with Government of India's Atmanirbhar policy. So this is still in discussion stage. We have given certain pricing. MOD has got certain, and Navy has got certain observations on that. So along with shipyards and OEM, we are working on that.
Got it, sir. Sir, if I look at historical trend, we have received closer to 25% of contract value as a part of derivative orders from these larger projects. So is it fair to assume with the higher localization opportunity in future that percentage can go up closer to 30-35%?
It should go. It should go. That's what we also anticipate.
Thank you, sir. Thank you so much for this clarity. I'll get back to the queue.
Thank you.
Thank you. The next question is from the line of Gagan Thareja from ASK Investment. Please go ahead.
Yeah. Good morning, sir. I hope I'm audible.
Yes.
Yeah. Sir, the first question pertains to the order inflow for FY26. You indicated there is a very high chance that QRSAM will go into 26. But apart from QRSAM, on the other, portions like radar, avionics, is a pipeline of 20 to 25,000 crore also possible for FY26?
See, what I see when we review our all order acquisition plan, as I indicated earlier, 24-25, we are looking around 25,000 around minus QRSAM. Now 25-26, if you see that QRSAM is there and another around 15 to 20,000 crore is in pipeline because hundreds of products are there. See, if there are 70 lines and each 200 crore, so 14,000 crore is like this only on an average. From 100 crore, 50 crore, 200 crore, 300 crore. But these are short cycle time projects. So for 25-26, it becomes very difficult to specify all these what it will come. But this is how it comes because these are the projects, these are the products, these are the spares, these are the modules which are required to support the existing fleet also, existing products also, many spares, many modules, upgrades, additional features, additional things. So their visibility is 1 year only, 1.5 years. So this year we have got clear visibility of around 25,000 crore minus QRSAM. Next year we have clear visibility of around 10 to 15,000 crore plus QRSAM. But then the more we reach closer to next year end financial year, we'll see the much clearer visibility for these all small orders, which added together are significant. Right.
Understood, sir. Understood. Also on the share of work for LCA, you indicated air data computer, EFCC, and one more component. Would you not be doing? Would you not be doing?
Yeah.
Would you not be doing anything related to the electronic warfare suite for LCA? Components like IFF or a missile approach warning system and infrared search and track and.
No, we are working on that. Yeah, we are working on that also, but there are something imported in current one. We are working on indigenous one, and we are in the process of proving it. So it will also come, but see, unless there is a very good clarity, I would not like to add it and then create that hype.
So no, completely understand, sir. We are just looking at what is potentially possible, not necessary that you have assurance of it, but since DRDO is looking to localize the electronic warfare suite, I presume you will be doing the manufacturing for that.
Yes. We are working on that, very sure. But see, unless there is something on concrete on the ground, normally BEL is a bit conservative organization, so we don't project just on the hearsay. Unless there is something on concrete on the ground, then only we project. Because when we project, we stand by it that we will get it.
But what is the potential value of the electronic warfare suite in the aircraft itself? I'm not asking, what BEL can get, but I'm looking at what's the value of the warfare suite.
Working on R&D projects, development, and also what price HAL has procured, I'm not aware. Maybe our team may be aware, but at this point of time, I don't have it.
Okay. And would you be involved in the PICA system, the Kavach system for the railways? Would you be working there as well? That's also an electronic component, right?
Yes. See, there are, I think, two vendors or three vendors as of now for Kavach. Yes. So you will be happy that we have also been one of our unit in Kotadwara. recently they got provisionally certified for Kavach. So within a year or so, 18 months, I think time, we have to submit that electronic equipment for Kavach. So yes, we are in the fray for Kavach also. More over and above Kavach, what we have given to railway is that the centralized intelligence Kavach monitoring system. That is, when post Balasore that train accident, railways wanted to integrate these and monitor that. So having our strength in C4I, we have given this to railway that Kavach integration system, which is pilot project is under operation. So that business opportunity also will come to us for integrating that Kavach.
Okay. When do you see,
sorry to interrupt, sir. I would request Mr. Gagan to please follow up in the question queue for further questions. Okay?
All right.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Thank you. The next question is from the line of Jonas Putta from Birla Mutual Funds. Please go ahead.
Thank you, gentlemen, for the opportunity and congratulations on a great set of numbers. 2 quick questions. Firstly, sir, what we have seen is that increasingly BEL is facing competition from the private sector in 2 domains which were very core to it, which is basically radar systems and electro-optics. So, in our guidance of 25,000 crores of order inflows, are there any projects where there is a multiplayer bid pending which the order gets confirmed, or all of these are single vendor, though competitive, but still single vendor? And, what are we doing to sort of regain the stronghold of ours in radars and electro-optics? And combined with that, if you can talk about the RWR for the Su-30 that we were developing, what is the status on that? Because recently I think HL mentioned that they are very close to getting the contract to the Su-30 upgrade program. So are we involved in that? So that's the first question.
Competition is not new to BEL. Way back in 2004, when government brought Raksha Utpadan Ratna RUR concept, from then onwards we are facing competition in both radar system and electro-optics and other projects also. So it's not like every time we got the radar order. You remember that MPR we lost to L&T and ELTA competition. Then a few more PDDS we lost to Tata. Then there are some projects. CMS, there was a competition, combat management system, where for indigenous aircraft carrier we lost to Tata. But later on we regained, and post we lost to Tata in 2011. All CMS program we won, whether it is nominated somewhere and somewhere competitive also. So you say that environment is there where this is market is open and competition is there. We are fully geared up to face the competition, and we had quite a bit of success. What we have given is around guidance of 25,000 crores. It does contain certain amounts of competitive bids also. But then we have taken a sufficient, what you say, that factor, when we say that 25,000 crore range, seeing the winning probability. So it's not like we have added everything and told you 25,000 crore. We have added some factor, considering that when you are in competitive bid, you may not win everything.
Understood. So sorry, on the RWR for Su-30, sir.
RWR, I do not have a detailed data as of now. Maybe I would like to pass it and tell you details sometimes later.
Sure. So my second question was on this provisioning again. Sir, if I recollect, even a year and a half ago, I think we had provided for IACCS, I think more or less the same amount, 150, 180 crores. So in total, roughly 400 crores is what we've provided for in a project which was relatively lower margin in the first place compared to our other businesses, given that it had a very high component of civil construction. Do you believe that almost 1/3 of the profit margin that was expected in this project has been now provided for, and is there a risk for a further provisioning? And how many of the 10 nodes have been commissioned?
See, if you see that total project cost, it is 8,000 crore for civil and electronic equipment supply and 2,000 crore AMC. 8,000 crore, if you see, roughly 5,000 crore is the civil and 3,000 crore is the equipment. So that is total. There are 9 underground nodes and 5 overground nodes. All majority of the overground nodes, I think it has come up very well. As far as underground, 2 underground nodes, that has been completed, site acceptance test, and it is in the process of, they are working, but process of we have to get the certificate and handing over. Remaining are at various stages. 3 are very advanced stage. Maybe by this financial year it will be completed, remaining in next financial year. So that is the total status. So whatever provisioning is there, I don't think...
this is the first year we are providing for ISCCS project, which is 230 crores. We have not provided and we made any provisions earlier. This is the first year.
This is the 230 crore is the only provision
which is existing
for ISCCS for a project value of around 8,000 crore. This provision includes both civil and equipments.
So, and this was to come with a AMC of 2,000 crores. Has that AMC come?
No, AMC is coming. AMC is coming because AMC 2,000 crore is for 7 years for all nodes. So as and when nodes are completed, that portion AMC comes. So like overground nodes, if 4 became operational, we got the AMC after warranty completion, we got the AMC. Now underground nodes also, the moment they are complete and then warranty will be over, we'll get. So this is contract is AMC contract is there in the main contract. Value is decided, terms and conditions are decided, but they will release the order the moment warranty is over on side by side basis.
Understood. Great, sir. All the best for the future. Thank you.
Thank you. The next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot. Sir, in your order book, how much is the negotiated orders and how much are competitively bid?
90-95 nominated.
Normally negotiated, if you see around 90%, 10% we can say that competitive bid also, but negotiation customer does in competitive bid also. Even if you are in L1, they do conduct negotiation and then pricing is finalized.
Okay, but without any competition at all, the proportion will be 90%, the nominated orders, I meant.
Okay. But one thing I would like to bring it is, when we say that without competition at this point of time, but many of the projects, we did had a competition at the initial stages. And we won, and then when it comes upgrades, it comes expansion, it comes all these things, we come because we have already provided parts. Means services or products, so it makes sense for customer to come to us on single tender basis.
Okay, and sir, for the nominated margins, so the methodology is now well settled. There is no if and but on the methodology as to how the margin will be provided. Just asking this question because a few years ago we had a little bit of a confusion or controversy regarding how the margins will be provided. So now there is no doubt on how the margins will be provided to the company, right?
Yes.
Okay. And now that your margins are expanding on your P&L, so do you think that the customer or the government can kind of claw back some of the margins?
I don't think, because when we negotiate single tender basis, they do have their benchmarking, right? Price with existing product, similar product, contemporary product. They do the cost audit also for larger projects, and then this is there. What I would like to say that when, as per MOD guidelines, when they say that 7.5% margin profit is allowed, it's a clean profit over and above all expenses. And all expenses includes bill of material expense, then manufacturing overhead, non-manufacturing overhead, then project management cost. Many costs or heads are there where pricing is given by government, cost is given by the government. Now, when you do the efficient and very effective operations, you tend to save on all these fronts, and that's how our margin goes much more than 7.5% because of our operational efficiency. If you are able to negotiate, if you are able to better than what was original proposal, if you are able to find out alternate source, alternate product which meets the same requirement, if you are able to indigenize some imported products then and reduce the cost, if we do the project management very effectively in low cost, if we do, so many things are there. Overhead we are able to reduce, we do with lesser overhead as compared to what is permissible as per government now. So all these add to the profit over and above what 7.5% is in guidelines. So what we are able to maintain is our better efficiency, better project management, and innovation and R&D what we are spending and taking, bringing down the cost saving. We have a cost management committee across all SBU and R&D function, where their main job is that continuously working on how to bring down the cost of each projects by all these various methodology, which includes innovation, which includes alternate development, indigenization, all these aspects they keep on working. So this is the way we are able to maintain that margins despite that government's that norms.
But sir, in the next iteration of the same product, does not the MOD ask you to share some of these efficiency benefits? Because I mean, like in a regulated utilities, we see that the regulator kind of keeps on tightening the norms over a longer time frame, so that the efficiency benefits are shared with the customer.
But then the electronics is a very fast changing technology. So by the time next time comes, many things get changed. So it gets reset. So this is our strategy. See, as a business organization, we have our own strategy how to meet the stakeholders, shareholders' expectation of margins.
Okay, sir. Great. Good to hear. Thanks a lot.
Thank you. The next question is from the line of Mahesh Bandre from LIC Mutual Funds. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, we are scaling up our operations and we are expecting a decent amount of orders going forward. So,
sorry to interrupt, sir. Your voice is coming as very low. Could you please speak a bit louder?
I'm audible now?
Yes, sir.
Yes.
Yeah. Sir, we have a decent order book and order inflow we are expecting. So, I mean, to deliver these orders, the supply chain management is very important. So, in terms of vendor management, I mean, what is the current vendor we have in India, abroad, and what kind of expansion you see or development you see in those just to improve supply chain management?
See, vendor management, many things in defense projects, you get locked on to the vendor during trial and evaluation stage itself, for majority of the cases. So you have initial vendor selection, vendor approval, you take that, you decide that. But once that OEM product gets evaluated, it becomes a bit tricky and longer term process to replace that. So all these products, when we go through trial, evaluation, we identify one or two sources where we get the product evaluated and we stick to that. So we are able to manage the supply chain issue fairly well. If there is some issue in some part, we have a parallel processing where we have a plan B for alternate source. But then we have to put extra efforts to get it parallelly evaluated, get limited qualification, whatever required is done, and choose that. So our R&D and product development teams keep on working on these aspects to take care of that risk mitigation.
Sure. Thank you. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Amit Binde from Morgan Stanley. Please go ahead. Hello, Mr. Amit. Your line has been unmuted. Please go ahead with your question. Hello, Mr. Amit.
Hello, am I audible now?
Yes,
Hello,
sir, you're
can you hear me?
audible.
Yeah, sorry for that. Yeah, so sir, I wanted to understand the medium-term execution outlook given the large backlog plus the guidance that you have given, and also X of QRSAM also we have a good pipeline. So if we talk about 3 to 4 years of execution, what could be the growth CAGR that we can see?
See, this year we are targeting around 15%. That's what I'm telling. Based on what is the requirement of the customer. As earlier also I told that our execution plan depends upon when that items are required by the customer. What is the window for that? Even if I have a 76,000 crore order, suppose this is related with the ships. Now, if ship is going to be built in 2027, customer will take only 6 months in advance.
Correct.
Otherwise, what he will keep with this, and he will pay to us and it will be lying there. So that's how we make that total production plan. Like LCA also. We have order for full 83 quantity, but HL will not take all full 83 in next 1 year, 1.5 years.
Right.
They will spread it based on their capacity. So based on that, we make the execution plan for every year. So like this year, we are planning somewhere around 15% growth over this. That will be able to fairly meet the customer requirement. And this double-digit growth will continue, and we will scale it up further. If further order comes, then our capacity, as I was telling, 5 new factories are coming. So once this order inflow is much more, then we will scale up, and even growth may be even better than what we are projecting now. Much better than that. But all depends upon how our capacity build up and what is the requirement or expectation of the customer.
All right. Got that. Got that. And sir, just the second one that I want to understand is what is the R&D pipeline right now, and like how much of the percentage of revenue we are investing now and in the forecast that we think?
Last year we spent around 1100 crore, which was around 6% of our total turnover. So absolute term we increased, but because our turnover grew much more, so percentage term it is slightly lesser. But we are very aggressive on working on R&D. Many new projects we are taking in all our product domain, and we target at least 7 to 8% of our turnover going for R&D.
All right. Sir, and just one more thing, that on the BEML product that we have, when would that be ready, and any technology partnership that we are planning to have?
BEML we have signed an MOU to develop their electronic portion, which there goes in their metro products, that their bogies. So we have signed, we are working, we have formed the R&D team. So I don't think there is any technology partner is required. Our R&D is fully geared up. We got a lot of learning from working with metro for metro products. So that what learning we got, we are leveraging on those learning for working on BEML requirement. Maybe if some expertise is available or required from Delhi Metro, we'll take from them.
Right, got that, sir. Those are my questions. Thanks.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations for a good set of results. I just wanted to keep you on the employee cost. Your employee cost has consistently come down over last 8 years. Right now it's around 12.5%. Where do you think this number would be over next 2 years? That's the first question.
It will be around the same range. See, actually, if you see employee cost is increasing and in absolute terms. As the turnover increases, the percentage has come down slightly, but consistently we'll expect it to be around 12% in the coming years.
Okay. And recently, sir, DRDO has come up with Netra as a product for the AVAC system. We hear that Bharat Electronics could be the beneficiary here. If you can help us with the size of this order, I think around 6 Netra is.
Still under discussion. So at this point of time, because now you are only saying that there's a very competitive market where DRDO has to look into many other options, including Bharat Electronics. So it is not fair for me to divulge at this point of time what we are offering to DRDO.
Okay. But any color on size, sir, would be helpful.
We'll tell it later. When things are concrete, then only we'll tell.
Understood. And then one question on BEML. So you've also signed up with to manufacture engines for tanks with BEML, right? You have come up
No,
with an
not.
MOU.
See, BML is working on developing the indigenous engine.
Right.
So it is a multi-company MOU what we signed. BML is there, we are there. I think AVNL also is there. So
Right.
what we have contributed is electronic portion of that engine will be done by us.
Okay. Understood, sir. But you will not be the lead integrator here, right?
Lead is BML.
Lead is
Because
BML.
see, engine is the majority. Main thing is IC engine, internal combustion and mechanical and all these things where BML is having its strength. Our core area is electronic portion.
And that engine prototype has already been developed, right? So right now you are under testing those prototypes. Is that correct understanding?
No, I have just now we have signed an MOU, so I have to look into. But I don't think prototype for what MOU we have signed it has been done. They have developed and tested prototype for some other version.
Okay, understood, sir. Okay. Thank you and wishing you all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. So my first question is on, there are several development programs happening on the artillery front, namely ATAX, Stout Gun System, MGS, as well as light tanks. So sir, what would be our supply portion in these platforms? Also, if you could highlight what is the share of electronics as a percentage of overall cost in an artillery system, that would be helpful.
See, artillery systems is now being done by private sector also and erstwhile OFG company also. So it depends upon what they want to get it from us and what they want to do from them, or they want to take from their OEMs. So at this point of time, it is difficult for us to really quantify for that. But yes, artillery command and control system and all, where integrating all these artillery has been done by us, and we are working on upgrading that. Similarly, some of the artillery products which are being done by OFB, their electronic suits are given by us.
Understood. Sure. So my second question is on, could you give us an update on the TAPAS UAV program where you have been developing the payloads? We read that this program, while the initial trials were reasonably successful, they failed to achieve certain required operational parameters, and I think the next set of trials will be conducted. So what is the road ahead over here?
See, with all these things, IF, what I understand and what input I have is that IF is expecting to procure around 6 systems for TAPAS, where lead will be HL and payloads will be from us. So rough budgetary code we have already given. So let us see when they process.
So this will be like the limited series units before you get the bulk production order?
I am not very clear on that because TAPAS, if you see, lead is HL. But they did have taken a budgetary code from us for payloads.
Understood, sir. Thank you very much for answering my questions and all the best.
Thank you.
Thank you. The next question is from the line of Tipen Wakali, an individual investor. Please go ahead.
Hello, am I audible, sir?
Yes, please.
Yeah. So my first question is on the line of, sir, you mentioned that last year you faced some supply chain disruption because of the Israel geography. So can you highlight which were the main programs which were impacted where we procure components or subcomponents from foreign OEMs? And what is it going ahead? Is everything sorted now, or there are still any areas where we're still facing challenges?
Some of the products which we had with the foreign OEMs, it's not fair for me to just specify one individual company or second individual company. There are many companies. Some of them faced problems, some of them were able to overcome. But as of now, fairly it has been addressed, what I can say.
So which were the programs that were affected for us?
That's what I'm telling. See, there are quite few programs we are doing. So for me, specifying individual company is not fair for that company.
Got it, sir. So my second question is that you mentioned that the competition is rising and we are seeing increased private sector participation also. So how does BEL looks at private sector participation? As in more from collaborative front, or is it more from the competition front? And how do you see the situation evolving going ahead if it's on the collaborative front?
It's both way it is working. See, many products with big private sector, we are collaborating also. And some of the area where the products are common, we are competing also. It's a very healthy situation. And in fact, some amount of competition is good because it brings the efficiency in the system. So we are fully geared up for facing competition. With the same set of OEMs, we are collaborating also. See, L&T, if you see large L&T, some of the products we are competing. Some of the products, they are our suppliers. Some of the products, they are, as a shipbuilder, they are our customers. So all three type of relationship are there with the L&T. Similarly, Tata also, same thing is there. So we are working on many products with these private company as a collaborator. But some of them, it's a fair game where we have a similar type of product, we compete also.
So is it fair to say that in wherever BEL is collaborating, BEL will keep core strategically important components with them and outsource other sub-components to private players?
See, it depends upon who is the lead. See, if it is my product, I will keep core with me and give it to non-core to others. If it is their product, they will keep core with them and give me as non-core. So it depends upon who has got upper hand. So case to case, it depends. If we are leading, then definitely as a strategy, I would like to not part away with the core.
Got it, sir. Thank you so much for answering my question. All the best for FY25.
Thanks.
Sir, we'll take up the last couple of questions, please.
Thank you. Sir, you want to take more questions?
No. Last question you can post, please.
Okay, sir. Yes, sir. Ladies and gentlemen, due to time constraint, that was the last question for today's conference call. I would like to hand the conference over to the management for closing comments.
With the closing comments, so thank you very much to all of you for discussing with us and having a query on Bharat Electronics. So again, I would like to reiterate our future outlook or our guidance for 24-25. We are targeting a revenue growth of around 15%, EBITDA margin 23 to 25%, order inflow around 25,000 crores, R&D investment between 6 to 7%, roughly around 1,300 to 1,400 crores, capex around 700 to 800 crores, and defense to non-defense business will be 85-15, roughly in that round. Export around $110 million, that's what we are expecting. Order acquisition and export around the $200 million plus. So these are our guidance. Thank you very much for showing confidence in Bharat Electronics, and I assure you that we strive hard to do much better than what we say. So a bit conservative, that's why whatever we say, it's based on our very thorough analysis and work by our team with a lot of homework done, and whatever we say, we stand by it. Thank you very much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you, please.
Thank you.